Good Sunday afternoon, traders. This is the recap for last Friday, August 19th. I wanted to go through the charts, and I did need to. Let me turn that off. Okay, turned off the volume by price. Here's what the market looked like at 8 o'clock this morning at the New York Open. Oh, I will need that here in a second. The New York Open, things were heading down. You'll notice the trend overnight was down. London market came all the way back, all the way down to what, 2175 or so. And from up here at 2180, almost 2184, market came down, retraced up to here, and that's going to be important here in a second, that level. You always want to pay attention to the retracements because the retracements will give you a clue as to where the ultimate target of the market, or at least the next move of the market. And I'll show you that here in a minute. So as we go through, and I'll just go ahead and pull this. I won't play it. I'll go ahead and pull it. You'll see it hit the London low again. Right, pretty close to it anyway. I've got that thing in the bar in the way, so I can't really see it. Let me turn that off. I've got that here. Okay, so yeah, it came down to like within a tick. Okay, so the New York Open, it came down to within a tick of the London low. Okay, and then moved forward. Looks like it's going back upside. Yeah, but here we got this little nasty little retracement here. Okay, we got this guy that's acting as resistance. So what we can do is we can draw our fibs, and I'll show you a couple of different ways to do this depending on what your goal is. And this is an interesting part of drawing fibs. It's like, what's your goal? My goal in the morning session, my motto is very quickly becoming one and done. I want to do one trade in the morning. Market opens, I get in, hits my target, I get out, see you later, have a nice day. Other people want to play for max ticks. They want to stay in, they want to ride the wave up and down, and that's okay. Others want to get in and scalp, for a few ticks and go, and that's okay. You'll notice that when we draw our fib from from the high, I'll put my high on just to show you about on that pullback. See what that pullback is at what, 2179.50. If you'll notice, you've got a 160 minus 161.8 of 2172.50. Okay, remember that thing. Interestingly enough, if you draw it this way, you also get 161.8, 2172.50. So the market is basically telling you where it's going to go. Number one, we know it's going to go downside, or we suspect it's going to go downside. We're looking at 2179.50 as resistance. So I'm getting confluence between the 161.8 and a negative 161.8, which we know the market will very often, will often hit. So I'm looking at 2172.50 as a possible bottom of the market, at least for the initial move this morning. Okay. The regular way I would draw my fibs, and let's see, where are we? 835. I'm going to move this a little bit because what you're going to see here, and that's what fools some people, is when the market comes forward, hit the wrong one there. When the market comes forward, okay, you'll see the market come up, and I want to draw a line right there at the. There's my resistance at 2179.50. And it fools people because they see this the New York Open, and they go, oh, they're buying it up. They're gonna, they're going long. They're going long, and the market's gonna go long, and they don't look at that resistance point right there. They don't see that retracement. Once the market bottomed out, they're not going to go back up very much farther. And then we see another one down here. So I'm paying attention to this guy right here. So as we go forward, it's 8:45, 9, blah blah blah. We're at 9 o'clock, 9:05, pop up again, 9:10, 9:15. At this particular point, I would have gotten in. I would have gone short at this particular point. In fact, I did, for another reason, but I'll show you that here in a second. So we're getting confluence here. We get confluence down to the bottom side. What was that? I'm going to draw a line there at 2172.50. Okay, I want to put another line down there because I want to show you. Does the market hit that? Okay, so there's my bottom at 2172.50. There's my entry point at 2179.50. That's what, seven points. That's 28 ticks of profit. That's not bad, for one contract. That's pretty good. That's what, 300 some odd dollars. 28 ticks times 1250 is 350 bucks. That would be a nice $350 maximum profit for. You're risking maybe 8 ticks on the upside at the most. If you're looking at this guy as resistance, or you're looking at the 200 EMA. Say for example, the 200 EMA. If you got in like right here at 2179, you're only looking at maybe 4 ticks of heat if it gets up that far. So let's see, it's 9:15. We'll go to 9:25 when I usually do my read on the market. 9:25, bam. Okay, you see, look at that big old red tail there. It basically is going down, and it's kind of hit the top of the market. So 2179. One of the advantages of getting up early in the morning at 5 o'clock my time, 8 o'clock for the New York Open, is you can see this stuff and you can draw this and you can look at the chart and make some educated decisions about okay, what's going to happen. So this was resistance. We saw that as resistance here. Okay, so we got in short. Our target down here is 2172.50. Or let's draw where I usually draw it. I would usually draw it in this particular circumstance just as a short-term target because I have no idea how long it would take to get down here. Oh, and you can see, by the way, you can see the volume popping up here. I'll go from pivot point down to here. Which gives me an entry of 2179 between 2178.75 and 2179.25. So anywhere in there, you get it. Hey, if you wait till 9:25, sorry, Charlie, you missed the vote. I'm looking at between 2173.75 and 2173.25. Me personally, as a target, I'm not going to ride that thing down to 2170.50 because I have no idea how long it's going to take, and based on my experience in watching the market, it's going to hit between 2173.75 and 2173.25 pretty quick. With the downside target past that, 2172.50, I would tend to put my fill right around 2173.25 or 2173.50. Okay, so let me put that. Let me put a line at 2173.50. There. Okay, so there's our other fill. So, another thing, we're at 9:25. Another thing I wanted to show you guys was I don't use this as a primary. I know some people use this as primary, but I use volume by price sometimes to take a look to see, somebody will say, hey, it's going long at this particular point. Where are all the orders? Okay, well, if you look at it, where are all the orders? At 9:25, where are all the orders? The orders are below that 2179.50 point. You can see all these orders down here. Okay, so that tells me they're not trying to pull it up here. They're trying to pull it down here. at least here. Here's all the orders, and I will bet money that those are all short. A lot of those are short orders, and you can see this bar here. See that big old red thing there? I'm not a volume a volume price guy, and I think hopefully somebody will comment and say, hey, this is what this means. But what that means to me is that there's an increasing number of sell orders, and the sell orders are right in here. So there's a lot of sell orders you'll see, and there are a bunch of them right at this price level here between 2178.75 and 2178.25. So 2178.50 was probably a pretty darn good place to go. 2179.50, if you had gotten, if you gotten lucky and got up in here and got filled in here, this would probably be an optimum time to take a short. Like I said, all the orders here. So that's, to me, that's indicating that the action's going to be downside. Okay, so I'm going to hide this guy because it kind of gets distracting because it moves as you well, let me cancel that for a second. As you move the chart, it'll go ahead and replay, so you can see these things jumping around. Interesting enough, watch this. It's very interesting when the New York Open, you can see all these orders appear. You're thinking to yourself, wow, the market's going to go back long, right? And that's, if you were looking at the volume profile early in the morning at like 8 o'clock, you would think that. I would think that. But see, as we approach 8 o'clock, you can see the number of orders down here starting to increase, starting to grow. And 8 o'clock, there's my 8 o'clock New York. Okay, so the New York market's open. They bounced up a little bit, See, those number of orders are increasing. As we get to 8:30, we see a dramatic shift in the number of orders. They're starting to, especially at this price point, you can see that between that bar, between 8:25 and 8:30, you can see the number of orders up here, and the number of short orders, the number of longs, all that. You can see the volume up here between 8:20 and 8:25. Watch this. I'll move it just bam, just a little bit. Those decrease significantly. So that to me signifies a shift in market, early shift in market sentiment. Okay, now you can start to see all these orders down here below that 2179.50, below that retracement point. They're starting to build up orders down here. Okay, so there's probably guys jumping into shorts, and they're just going to wait because they'll ride out the heat. Because we just saw the market almost came back up to 2179.50. It was like at 2179, 2179.25. So they're going to take a couple of they may take a couple points of heat, or they're sitting down here. These are orders that are just sitting out here waiting for the market to drop back down to pick them up in a short. That's very possible too. So either they went short, or there may be a lot of people in here that got fooled into thinking that the market's going long. It's opening up, the market's going long, so I'm going long too. So, but as we saw, that didn't happen. So as we go along, as we go along from 8:30 to 8:35, watch this bar up here at the London high. Watch this guy. We're at 8:35. At 8:40. Start dropping. The bar above that between the Asian high and the London high. You see that? See these two bars? See that guy? Between 8:35 and 8:40, bam, all those orders went away. And then you'll see here, all those orders are going to start to go away dramatically. There, we just saw a huge drop, 8:45. And as we did that, we see the market shift, see the market sentiment shift into the downside. You can see that. There it is, the upside. Now there it is to the downside. Market sentiment shifting, 905, 910, 915, 920, 925. All those orders went away to the upside. So market sentiment is definitely shifted downside, based on volume. Okay, so say for example we were in up here, I will let me go ahead and draw mine. My sell order would be right up here, because I was up at like 9 o'clock, which is 6 o'clock my time, and looking at this thing and going, okay, I'm going to put a. I don't think it's going to go back up further than that resistance, so I'm going to put a short order. And I think I think the short order was like 21. I'd have to go back and look, but I believe that was like right around 21.79, right in this area, right in here somewhere. I think as it dropped down below the 89 EMA, I just grabbed it. I did a market order. I did a sell market and grabbed the short. So so we're, and I paid the tick penalty. So as we play this thing, as we go through, and I'll just move it because, wow, here we go. 9:30 market open. Bam, what happened? Here we go, short. 9:30, 9:35. I'm almost hit my fill. 9:40. We have one of these, and we have a little bit of volume here. Okay, but there's nothing really. There's no real change in this number of orders. So to me, let me play that. To me, that signified we did see a little bit of a jump down here. Okay, which was probably profit takers. People probably taking profits and driving the market up a little bit. Either that or it was a fake out. I saw a fair bit of volume here. So I don't think it was a fake out because the volume was high, but I think it was just people profit taking, selling, just getting out of their positions from up here. They're probably the 50, 100 contract guys, getting out, taking some profit. Okay, see, next bar, bam, and I got filled. Okay, that was right around 9:45. So within say 9:15, say within 30 minutes, I just got filled, and that would have been between, let's see, that was 21.79, 21.73.50. So that is, we do the math here, 21.73.50. That's 5.5 points. Yeah, that makes sense. That's what it was. 5.5 points times 4, which is 22 ticks. And as I recall, that's what the yeah, that's what it was. 22 ticks. That was my fill, and so I made 22 ticks on that downside move. Now, if you would have continued in that, bam, here we go. We just hit 21.72.50. So either there, you would have made money. Okay, now you're done. Okay, that's one and done. I'm done. Now, other people I know, they would have reversed right there. Bam. Okay, I just hit my downside. I'm reversing because this market's going back up. As you can see, the market sentiment starting to shift. See that line right there above 21.72.30, 21.73.75? See all those orders going away? Market sentiment starting to shift to the upside. So you can see that build, bam, bam, bam. Longs, okay. So there we go. So you could have ridden that back up to here, and you'll notice the market forms a V. That's very often if your slope is about 30% or so, the market will drop down to that level and then come right back up to where you were before. It's your entry. So that was a good opportunity. That was 2 good trades for that day. Let me turn that off. So 2 good trades. Man, you would have been sitting pretty. That's like that would be like, down here, down up there. That's 45 ticks or so. Which at $12.50 a tick, that's $562.50 for the day. That's per contract. So if you'd run 2 contracts, you'd have made over $1,000, well, almost $1,200 right there. And it's 10:35 in the morning. It's 10:30 in the morning, and well, it hit that price point at what? Yeah, 10:30 in the morning. You're done. You've been in the market for what? An hour and a half, and you're done. Go off and enjoy your day. Enjoy your winnings. You'll see the market came back up, came up a little back up to the pivot point, and then fiddle around, drop back down to historical low. You could have ridden that if you wanted to, and then just kind of, you know, or reversed here and went back up. And then there's where we were at the end. At the end of the day. So anyway, you can see what's going on. Follow your trend lines. Occasionally look at your volume price analysis. Occasionally look at that to, you know, if you're unsure where the market's going, that's not, and I don't use that as a primary indicator, but I just use that as confirmation where I think I think the market's going to go here because of this, because of that, and volume price will basically tell you. And oh, by the way, that study is over here, volume by price. So there's that study if you decide to use it. I know people that swear by it. I know people that swear at it. So, so either way. Anyway, next time I'll see you guys Monday afternoon, sometime, maybe Monday evening when I do the Monday recap. Hey, trade green, guys. Thanks.